As I discussed in my video 2 weeks ago, there's a fairly safe way for you to make 50% to 100% or even more on a 1 to 3 year long trade using safe U.S. government Treasury exposure. U.S. government Treasuries are thought of as boring, low return, but very safe investments. But in this case, they're presenting a rare opportunity to make very good returns while protecting your portfolio from downside equity risks. Typically, U.S. government Treasuries act as a balance to the equity risk in your portfolio. If you've watched my videos on the ideal portfolio, you'll know exactly what I'm talking about. I beat this drum all the time. Under normal circumstances, when there's a flight to safety, Treasury long bonds go up very quickly as equities drop. This counterbalance creates a nonlinear effect in the long-term performance of your portfolio. As you can see here, you can see that the portfolio, this big white bubble, is outperforming all of the components, certainly in terms of maximum loss, and you're getting almost all of the return of the highest risk equity component, which is the NASDAQ 100 here. So this is not obvious to people, and it happens over the long term. But when equities drop like a rock, this TLT 20-year Treasury ETF will typically shoot higher and offset some of the risk in these two asset classes. And the net result is, over the long term, you end up with very good portfolio performance. In this video, I'm going to discuss the time frame over which you should expect to see good returns from this strategy. Now look, the Fed hasn't started lowering rates yet. As you can see here, this black line is the current Fed funds rate. It's stuck up here at 5.5%, but they will most likely have to start lowering rates at the next Federal Reserve meeting 1 month from now in September. As with any investment, patience will be the key to reaping the potential upside in this strategy. We're quickly approaching the time for Treasuries to move higher over the next 1 to 3 years. Now you're probably asking, but how can I get 50 to 100% returns from safe Treasury bonds? As I discussed in my previous video, we're being presented with an opportunity that might not come around again for many years, if not decades. In this rare instance, exposure to long Treasuries through a leveraged ETF like TMF presents the opportunity for very large upside moves with limited exposure to downside risk. Look, this doesn't mean there's no risk, and you should absolutely consult with your financial advisor and do your own analysis before investing in this shorter term, let's call it 1 to 3 year, opportunity to potentially make outsized returns while protecting your portfolio from downside equity moves. So why does this trade present unusual limited downside along with large upside potential? Well, we're sitting at an inflection point in the interest rate cycle where the Fed is now going to be forced to lower rates to head off a bad recession. How much they lower rates is anyone's guess. But even if they just lower rates to more normal levels, you can see the potential for TMF to move substantially higher in the coming months or more. And the best part is, while you're waiting for this trade to move higher, the U.S. government Treasury exposure in your portfolio will offer protection from downside moves in equities. This positions you for higher returns with lower risk over the coming year or more. Every week, I try to bring you videos that explain what's going on in the markets and how to manage the risk in your portfolio. And from time to time, I produce videos on portfolio construction and other topics that might be of interest to you. Please leave your comments below and let me know what you think of this opportunity in TMF. Am I kidding myself, or does this have potential large upside with limited downside? If you found this video useful, please hit the like, subscribe button, and share this video with your friends and family. And as always, I appreciate it when you leave comments down below. Investments and investing aren't that complicated if you know how to allocate your portfolio without destroying your returns and getting little to no protection from downside risks. As an investor, you need to take the long view and allocate according to your risk tolerance, rather than fretting about what's currently happening in the world or what everybody else is doing that you read about in the media with their portfolios. If you want to be a better investor, I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below, titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments. Until next time, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
Stay up all night, gotta work now. Make up my mind, then it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here in the strobe lights. Pay anything for the high price. This life feels like the sunny water.